So today I'm joined by Chris James, who is Head of Accounting at Required's partner Workwell. Following on from the massive recruiter news on Friday that the reforms to IR35 have been rescinded as of April next year, Chris talks about just what a surprise it was to everyone, what that actually means now, and what it means going forward. I never thought I'd say an interesting podcast around IR35. Hope you enjoy. So welcome to the Required podcast. It's currently the Monday after the Friday mini budget. The world is in turmoil, at least the pound is, the markets are crashing, but everyone in recruitment is just talking about the big news on Friday, which was the rescinding of the off-payroll rules, or the amendments to the off-payroll rules in 2017, 2021. Now, for those who don't know, I've got with me today Chris James. Chris is, well, I'll let you introduce yourself, Chris. What is it you do?
Hi, thanks, Andy. I'm Chris James, and I head up the accountancy part of Workwell Group. So I'm an accountant in practice, basically looking after several thousand contractors across the UK in a range of industries. And that work obviously included helping people, those contractors, but also agencies and the rest of the supply chain with understanding the new rules when they came in 2017 and 2021.
Okay. So for those who don't know, Workwell is a super large umbrella organisation who do limited companies, and formerly a lot of people would know them as JSA Services.
That's right.
Got you. So for you guys, IR35 has been around for, as long as certainly you guys have been around.
Yes, yeah, that's right. I mean, obviously, when we say IR35, we are talking about two different pieces of legislation in the way people normally talk about it. So we've got the original intermediary legislation, what we now refer to as old IR35. That's the bit of legislation where a contractor working either direct for an end user or via an agency or in whatever format, they would have to look at the end of a tax year as to whether or not they think they have been working like an employee or like a genuine business in a business-to-business relationship type way. If they decide they've been working like an employee, then they have to look to pay employment taxes rather than the normal taxes a company owner might use, which would normally be a low amount of salary and then perhaps dividends to make up the difference. So that would save them some money if they were paid that way. But if old IR35 applied, they would have to look at applying employment taxes instead, which would, in almost all circumstances, mean that they paid some extra tax. So that's old IR35, which has applied since the year 2000.
So in layman's terms, it was more efficient for a contractor to be outside IR35 than it would be inside. So they'd be able to claim expenses, they'd pay potentially a lower rate of taxation, etc., etc. So that was the old rules pre-2017.
That's right, yeah. And so it's been around more than 20 years. And as you say, generally more tax efficient. Everyone wanted to be outside if that was genuinely their position. And of course, the key thing with those rules is the contractor decided, and if the contractor decided they were inside, they paid the extra tax. So then that didn't work terribly well for HMRC. They found it hard to investigate thousands of individual contractors. And so they looked for several years for a way to kind of make this better. And in 2017, they introduced this kind of turbocharged version of the rules. The rules around whether you were working like an employee or not, and therefore liable to employment taxes or a lower rate of tax, they're exactly the same principles. So things around mutuality of obligation, substitution, control, etc. Those detailed arguments about what does an employee look like, they're exactly the same for the new rules and the old rules. But the difference was with the new rules, it now wasn't down to the contractor to decide, except where there was a small company at the top of the chain. In almost all situations, the end user, the ultimate beneficiary of the work being done, they had to decide, is this piece of work that I'm letting a contractor do, is that like an employed role, or is it like a genuine business-to-business assignment? And and they had to make that decision. They had to transmit that decision down the chain, and to make sure that, for example, if it was an agency in between them and the contractor, the agency then paid the contractor in accordance with the decision made by the end hirer at the top. So if the end hirer decided it was an employed piece of work, they would be effectively telling the agency, pay this person with employment taxes deducted. And of course, inevitably, what actually happened then in most cases was it wasn't that the contractor continued to use their PSC to receive this employment tax deducted pay. It was normally that they would either work outside through their PSC as they had done before, or if it was an employed and inside position, they would normally look to get paid in a different way, perhaps agency payroll or an umbrella company, or even a permanent role occasionally with the end hirer. So it's the same principle. Is this person working like an employee? But now the decision rested elsewhere. And the first place HMRC would come if they wanted the money that they felt hadn't been deducted, the employment taxes that hadn't been taken away, they would actually come to whoever had paid the PSC, paid the contractor, which in many cases would, of course, be the agency.
Having worked agency side and rolled out the regulations in 2017, it was very interesting because up until that point, it was down to the contractor, and ultimately, we couldn't aid and abet them because obviously, but we would support them. We'd make our contracts as friendly as we could. We'd explain to end hirers around working practices, but ultimately, our whole opinion on it changed when we became liable.
Mm. Yeah, and the other interesting part about that was you ended up with this chain where you've got one person doing the work, someone else liable for the tax if that decision is wrong, and someone else making the decision. And on one of the original drafts of the new IR35, the second piece of legislation, the agency was going to have to decide as well. But it was decided in the end that they were too far removed from the situation to make that decision properly. So yeah, it was a very, very different world to the world before. Of course, for the revenue, the logical reason for doing it was because they felt that the rest of the supply chain perhaps didn't care enough about what contractors were doing. So you can understand why they thought this was a good way of working. But as we've seen, and as the government appears to have reached the same conclusion, they didn't think this worked very well as a compromise either.
So I sat there Friday, and I think I was on a Zoom call, and I saw just the news breaking basically, and I think everyone is expecting or hoping for a review, because as you've said, it hasn't been a perfect system. I don't think hirers don't like it, contractors don't like it, agencies don't like it, and actually everyone was thinking, right, okay, well, we might get a review, and we've had a few of those before. HMRC will review it, decide it's okay, and everything will be fine. So what do you think changed?
It is a bit of a mystery, to be frank, because as you say, I think the realistic expectation of people like myself who'd campaigned against this thing coming in the first place, that the second set of rules, we've been campaigning for 6-7 years, and it seemed to have gone quiet, although then obviously during this prime ministerial race, promises were made again to review IR35. But as you say, we've heard that before. So I think the best thing people were hoping for was a meaningful review. And so, yeah, I was as surprised as anybody else when, had to go back and kind of listen to it a few more times. We actually just stood up and said, yeah, actually, we'll just get rid of it. I was slightly regretful at that moment, because in the morning on the radio, obviously, lots of politicians, whatever, will come up and trail a bit what's going to happen. And there was so much talk of removing a stranglehold on entrepreneurs and promoting innovation and so on. I almost posted something on LinkedIn, but not saying maybe they'll get rid of it, just saying it does sound like this will be a meaningful review. So in terms of, why they've suddenly had this conversion of, opinion, it is true to say, the public accounts committees, the Lords, loads of people that have investigated this have found problem after problem after problem with it. People like me who talk about it, and there are lots of big name campaigners, your IPSAs, contractor calculator, people like that. Everyone has been uniformly negative about the way these reforms work, and that's never gone away. But in terms of why now something's broken through, I don't know. I can only assume there are enough voices around the policymakers at the central government that they've decided this would be a worthwhile thing to do, because it's not the central tenet of the budget at all. The budget's got lots of other, very headline grabbing tax reductions in it. So yeah, it's I don't know. I am kind of in my own world of campaigning. Like I say, I campaigned against this for years. I'm glad that they're taking it away. I think it's a bad piece of legislation. But of course, the other reality is it's unlikely that the revenue will just go back to the old days and not want to do anything different. So we'll have to see how this all plays out. But yeah, it's a mystery as to exactly why it's happening now, but I'm happy to see it.
And in terms of the budget as well, there are some other things for contractors that were quite obviously useful. So the revoking of the national insurance increase as well. So for umbrella workers, that's a significant increase in their take home, and also as well the reduction, for PSCs with dividends as well. So I guess actually looked like, I think for the first time in a while, central government had sort of started to understand the gig economy.
Yeah, it did feel that way. I wrote something along the lines of, this is the first contractor positive budget, even though it wasn't a budget, of course, for many, many years. And also, as well as everything else you mentioned, corporation tax was going up in April, and that's also been cancelled. So, it was. It was a highly significant budget-like event. I haven't seen anything that's quite so focused on business. I don't think in all the years I've been watching them. It's quite staggering.
And is it the enterprise allowance remains as well for the purchase of capital assets as well, which again?
Yes, annual investment allowance stays high. And obviously there are these investment zones as well that aren't in place yet, but they also include further easements such as reduced employers' national insurance contributions and everything else. But it's. I was wondering on Thursday when they confirmed the national insurance cancellation whether there might be a rabbit out of the hat, but I think there was a whole family of rabbits pulled out of the hat on Friday.
So obviously, when this news broke, there was a mixture of people, and I actually think one of the more dangerous things is the narrative that IR35 has gone. And I think to most people that would be the natural assumption, but it hasn't quite. And the rules don't change until April. So how does this now move? What does, I guess, the next 6 months hold? And then after that, what does that then hold, Chris?
Yeah. So there's a whole load of variables there, but if we kind of go through things in turn, like you say, so that first problem, as you mentioned, yes, IR35 is not and will not go away. It is still there in terms of the old rules, the rules where a contractor, if no one else is deciding how they are assessed, they still have to do that. And what's changing is from April 23, that second set of rules I described where the end user makes the decision and perhaps the agency or whoever else pays the PSC, they're at risk financially, that bit goes away. So from work done, it's not payments made, and that's important. There's normally a bit of people have imagined scenarios around payment dates around these changes. From work done from the 6th of April 23, it's no longer the responsibility of the end user to decide whether or not the person doing that work is acting like an employee or not. And it's no longer possible for the payments for that work for the revenue to come after the agency for the extra taxes, if that were the situation. So that goes away, but then that means, because the way that rule worked was, if that did apply, then you didn't have to do your own status assessment. But if it didn't apply, then you did have to do your own status assessment. So what we've done is gone back to where everyone has to do their own status assessment. So every traditional PSC, everyone supplying their own services through their own company that's owned by them or them and one or two other people only, they then have to go back, decide at the end of the tax year if they've been working like an employee or not. And then if they have to pay some extra taxes over. So IR35, as it has most long, for the greatest length of time being known, it hasn't gone away at all. It's still there. It's just the new one has gone. So where does that leave us? Well, first off, so today, the rules are exactly the same as they were last week. Nothing has changed. So an end user should still be issuing a status determination statement, that opinion about the status of the work.
And they should be doing that right up to all the time contractors working up to April 5th.
Yeah, for all the work done up to April the 5th, that's right. Now, of course, we know that many contracts, they'll go across that date. So, I think it would be, what would it be? Ambitious of anyone to think you could do a status assessment for some work before that date and then completely ignore that opinion after that date. But of course, what will happen as we go past that date is people's contracts will come to an end and new ones will start. Or extensions or whatever. And so the main changes, I imagine, will be as that churning of assignments and work happens. That's when things will change. Although I have already heard one or two people kind of thinking about the idea that, well, how likely is a challenge from now on and so on. Personally, I'd find that very, very dangerous. I think there's no, we're in this world already. I'd be planning for the time after April, not planning to kind of take a punt on the idea that HMRC won't be looking at this area anymore. We'll talk maybe a little bit later about what HMRC might be doing. But so that's the change. And of course, in terms of what might then happen, especially as we go through into April and beyond, it kind of depends where you are now. So if you're in a supply chain where, for example, the end user has just stopped working with PSCs, they just said, I don't want to work with PSCs anymore because if I did, I'd have to do status assessments. There's a potential financial risk. I don't like it. Then you're kind of in the middle ground, I'd say, because people can take a fresh look at that work from April onwards and decide, do I think I can do this on an outside basis or an inside basis? And there isn't kind of any track record to bear in mind. Of course, that doesn't mean, though, that an end user might decide, even continuing on, as well, we're comfortable in this situation, let's just stay with a ban on that way of working. So, as ever, it's going to depend partly on the opinion of the end user. They're still going to call the shots. But if they are happy with outside working, then the agency can find themselves feeling fairly comfortable, I think, because they've got no financial risk going forward. And the contractor, they just need to, they need to be able to look themselves in the face and sleep at night and whatever, and make an honest assessment about their status. And also in that market, of course, what will become more important again is contractors getting their own status assessments, which has been less important over the last 2 or 3 years because so many of them have had to rely on someone else's assessment, if indeed they've been able to work through their PSC. I think where a worker's been working in the supply chain has decided that work was inside and then put them into an umbrella or other payroll model. There's a harder decision to make there. People, that's not the same as saying, I don't want to work with PSCs, I don't want to take the risk. That's saying, I've looked at this and I think the work is inside. In that case, then you kind of made an employment decision, and it would be quite brave to believe that HMRC will completely ignore that decision in the future. And of course, if you're in a supply chain where your end users looked at your situation and decided that you are outside, or that the contractors you're placing are outside, then obviously that feels pretty safe because you should be able to just stop issuing SDSs. The financial risk falls away from the agency, and the contractors can continue to work happily as they were doing before. So that's the main types of things. I think people might be wondering how easy would it be for HMRC to notice that someone who's been working in a non-PSC way has gone back to PSC. Because, of course, if you think about how easy it was for them to notice that someone working in a PSC had moved to umbrella, that could be quite difficult. In this case, don't forget that however those people were employed, assuming they were through any kind of real employment, those individual contractors will have been on RTI submissions all the way through this period.
RTI?
So that's the electronic exchange of information that every employer, if you pay someone on a pay slip, basically, you have to send details of those people and the amounts every month or every pay cycle to HMRC. So they've got all that data. That doesn't mean they can automatically match it to anything else. You need data scientists to do that for you, and they have limited resources. But unlike in other times when we've had big changes in the ways of engaging people, because they do happen all the time, this isn't the first big change you've talked about, I'm sure, in your time, Andy. In this case, they do have a big long list of people who've been receiving employment income, and they will be able to compare it then to, if those people set up their own companies again and work through those, they will have to make their own RTI submissions, and they will be registered as directors of company house and so on. And it's not the hardest thing in the world to match those two things together. So that's why, obviously, just thinking it doesn't matter what I do in the new world would be an overly optimistic thing to think about if you were trying to work outside again.
I think the other thing that's different from before 2017 is and we saw a lot of, I saw a lot of practice around people being forced into limited companies who weren't appropriate. Very low-level blue-collar workers were the classic example. Delivery drivers, just wasn't right for the product in essence. Do agencies run a risk if they're trying to force people to do that so that it can give them a better return in effect?
Absolutely. Yes, they are, because what they're doing effectively there is there's a line you could cross in terms of knowing that these people are there's no reason to think these people are outside IR35 workers, are non-employee like workers, and so in that case, an agency has to be very careful if it is seen to be in any kind of organised way pushing people into a certain way of working that isn't appropriate for them. And the other just slightly technical but interesting point to make there as well. These status decisions are all informed by case law, and we've had another several years of case law since the last time people were assessing themselves, and quite a lot of that has been around roles like delivery drivers and so on. So there's kind of even more reasons to be careful as an agency about what you might think is an okay way for your workforce to operate. So get advice. I suggest there's, obviously you might want direct legal advice. People like us are very used to dealing with supply chains and analysing the different moving parts of them and working out where your options are and where your risks lie. But certainly, under the bits of law like the Criminal Finance Act, you mustn't put people in a place that to be highly likely to be challenging from a tax perspective. You can't do things that you ought to know look like that they're not appropriate.
And Chris, you were talking about working with HMRC to understand the rules going forward. So what will you and Workwell be doing for that?
Yeah, so in terms of what HMRC do going forward, what they're about, so they'll be faced with a situation in a few months' time where they can't use these new rules. They're going to have to go back to a world where they look at individual contractors and try and work out who might need investigating. And they found that very hard. That's why the rules were changed in the first place. So there's no doubt that they'll probably try and use data intelligence, as we were talking about a little bit earlier with payroll information and stuff like that, a bit more accurately. There is obviously a chance as well that going forward a few years, they did bring these new rules in to try and fix the position. They may indeed bring some more new rules in a few years' time, but it will take time. And they'll still be looking at things like, there was a recent case on employment status where they tried to use the agency intermediaries legislation to try and attack the status of a group of people. There's current issues in our marketplace around things like MSC. There's all sorts of different ways HMRC could use to try and attack a population of contractors. But I know some of the people on policy there. I meet with them quite regularly. They have limited resources that they focus in different areas at the moment. And lots of those people currently are working still on furlough fraud and stuff like that. And they'll have to make a decision in the years to come on where they focus that resource. Obviously, there were some noises in the mini budget that things like regulation are not where this government's focus is. But of course, this is tax collection, it's money. I'm sure they'll support HMRC in whatever efforts they can use to try and collect what they see as a kind of shortfall. But I'll continue to work with them. We do get updates on what their compliance activity is before it starts, and we'll be sharing that with the people we work with, of course.
Fantastic. Well, I never thought I'd say this, but exciting times ahead for the reform of IR35. So we'll obviously keep posted. We'll probably do a follow-up session with you guys. I think once we've got more of a view of what agency's going to do, how they're going to feel about it, and really go from there. But thanks so much for taking the time and jumping on this so quickly, Chris. Chris, if anyone does want to pick your brains, take advice, how can they get hold of you?
Yeah, the best way, especially for the kind of things I put out on IR35, which obviously it's gone massively back up in the last few days, is on LinkedIn. So that's the best initial place, and I do respond to messages. It is me; it's not a robot. So that's the best place to start, and you'll find a lot of the whatever's the most up to date thinking I put on there.
Fantastic. Well, thank you so much for taking the time, and certainly do keep us updated.
Will do. Thanks a lot.